Welcome back to Investing Talk Podcast.
Today we're looking at Cemtrex.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, let's do it. Let's unpack this turnaround story because the numbers are really the place to start here.
They are. We're talking about a diversified technology company. They're known for things like their security platforms, Vicon, and some industrial services.
Right.
But the core story right now, the reason we're talking about them, is this massive financial inflection point that they're projecting.
Okay, so inflection point. Let's talk numbers.
Mm-hmm.
Historically, revenue has been growing, right?
It has. We
Yeah.
saw revenue grow about, 12, nearly 13% in fiscal 24, hit about $67 million.
And what's the outlook now for 2025?
The forecast is for that to accelerate. Revenue is projected to hit over $80 million.
80 million, so that's almost 20% year-over-year growth.
Exactly. But, 20% top-line growth is solid, but that's not really the big story here. It's the margin swing. That's where it gets interesting.
Right, because they were running deeply negative net margins in 24, like negative 11%. Can they actually swing from burning that much cash to making money in just 1 year?
Well, the consensus forecast believes they can. It's projecting a massive shift from that negative 11% to a positive net margin.
A positive way.
Yeah, it's a slim one, mind you, around 0.16% in 2025. But that shift, that's what allows for this just dramatic change in earnings.
And speaking of dramatic, we have to talk about that historical EPS number. It looks insane, like a negative $265 per share loss. I mean, for anyone new to the stock, what is going on there?
Yeah, that number it's a historical artifact. You really need context. The key thing to remember is the stock went through a massive reverse split.
Oh, okay.
And that split just artificially inflates that per share loss figure. It makes the historical burn look way worse than the actual net income loss.
So what should we focus on instead?
The magnitude of the shift. You're going from a trailing 12-month net loss of over $20 million to a projected positive 56 cents per share in 2025. That flip from heavy losses to, forecast profitability, that is the entire story.
So the goal is just stop the cash burn. I mean, if they hit that positive margin, even a tiny one, that's operating leverage kicking in. But wait, a swing from negative 11% to positive 0.16%, I mean, does that rely on perfect execution?
Oh, absolutely. It's highly optimistic, and it rests on two huge assumptions. First, aggressive cost cuts that actually stick.
And the second?
The second, and this is the bigger one, is the massive strategic shift they're making. We're talking about fundamentally changing the quality of the revenue.
Okay.
And that brings us right to the aerospace pivot.
Right. That profitability just doesn't happen without this one huge bet.
Yeah.
So let's talk about the acquisition that's supposed to make it all possible. Invocon.
This is where the story gets really, structurally interesting. Cemtrex is buying Invocon for about $7 million.
$7 million.
And it's an explicit move to expand into aerospace and defense, a really lucrative sector with high barriers to entry. This isn't just a small add-on. It's a total strategic reorientation for the company.
But why is aerospace the magic bullet for margins here? I mean, we've seen a lot of microcaps promise some high-margin pivot. What makes this IP acquisition different?
The difference is the moat that Invocon brings to the table. They're described as a proven aerospace and defense engineering firm. This isn't just buying sales.
It's buying expertise.
It's acquiring specialized engineering IP and deep domain knowledge that Cemtrex just did not have before.
And that specialization is the key to that margin swing you were talking about.
It translates directly. We're talking higher margin growth, long-term sticky contracts, and crucially, those high barriers to entry. You just don't find that in their legacy businesses like, commoditized IT services.
So they're trying to build a new identity.
Exactly. They can leverage their existing security systems like Vicon, which are already mission critical, and then add this specialized aerospace engineering on top. It creates something differentiated. They become this sort of niche vendor at the crossroads of security and defense.
Okay, but if we connect this back to their size, this is where I see the paradox. This is a tiny company, a market cap of what, 2.27 million?
Barely.
So how does a company the market values at $2.25 million finances $7 million acquisitions?
Yeah.
I mean, aren't they going to crush the balance sheet or just dilute shareholders into oblivion?
And that is the absolute core tension of this whole investment thesis. The deal size is small relative to their revenue, right? They did $66 million last year.
Okay.
So they're buying a revenue stream that's probably several times their entire market cap. The risk is immense, but so is the potential leverage.
So how do you even evaluate that financing risk?
Well, given the revenue base, the financing is likely a mix of, secured debt and some equity. If it's equity, yes, that means dilution. Always a concern.
Always.
But if they can successfully integrate this higher margin business, if it starts spitting out cash flow quickly, it creates a much faster path to breaking even on free cash flow. The market's basically betting the cash from the acquisition will pay for the acquisition itself.
It's a high-stakes, highly leveraged bet.
Extremely.
Okay, so integration is hurdle number one. Let's shift gears for a second, away from fundamentals into the technicals. This stock is, it's notoriously volatile.
Oh,
It's trading around $7 now, but the 52-week range is from $250 up to almost $60. This is a high beta vehicle, to put it mildly.
it really is. And the technical backdrop right now is, well, it's decidedly bullish. Most of the technical aggregators are summarizing the current setup as a strong buy.
What are you seeing specifically?
We're seeing price crossing above both the 20-day and the 60-day simple moving averages. That's a classic signal that this short-term rally is starting to establish a real directional move.
What about momentum? I'm looking at the RSI, the Relative Strength Index, and it's high, around 71. For a big company that screams overbought, maybe a reversal is coming, what does it mean for a stock like this?
That's a great point. In a thinly traded microcap that's in a strong uptrend like this, a high RSI often signals something different. It suggests aggressive, sustained accumulation.
So conviction buying.
Exactly, not an imminent reversal. And you see other indicators like the ADX also signaling there's moderate trend strength here. This isn't just market noise or a one-day spike.
So the chart seems to support a pretty significant swing trade idea here. I'm seeing some aggressive near-term forecasts, some suggesting an average 30-day target in the high teens.
Yeah, which implies substantial triple-digit upside from where we are now. It frames this current move as possibly the beginning of a major breakout, and even the more conservative consensus puts the 2026 target around $11, which is still a lot of upside.
Okay, so we have a potential path to profitability, we have technical momentum, but we have to talk about the risks. What's the biggest threat here?
The biggest fundamental risk is just execution, plain and simple. They're trying to shift into a brand new, highly specialized sector.
Right.
If that Invocon integration is slow, or if those high-margin aerospace contracts don't come through quickly, and these things can take a long time with government agencies, then that whole projected path to profitability, it just disappears. They have to prove this isn't just a fantasy on a spreadsheet.
And the market's perception is definitely working against them. The volatility, the reverse stock split, it has the reputation of being a, quote, high-risk casino.
It does, and that scares off institutional money. But there's a flip side to that. That tiny $2.27 million market cap suggests a lot of that risk is already priced in.
You think so?
I think so. If management can execute even moderately well, the potential for a re-rating is huge, just given the discount to their forecast revenue. And low institutional ownership means there's a lot of latent demand, a lot of buyers sitting on the sidelines if the story starts to prove out.
So what are the key events for people to watch in the near term?
The main one is the next earnings date, which should be around December 29th, 2025. What management says on that call will be critical.
What are you listening for specifically?
The aerospace backlog, any announced contract wins, and most importantly, updated margin guidance for 2025.
And what about outside of earnings reports?
We need concrete updates on the Invocon deal closing and the integration milestones. Every press release that shows progress, that validates a successful step or a joint contract win, that's an incremental catalyst. It de-risks the story bit by bit.
And what about the big picture?
We should also just watch for macro tailwinds. If sentiment shifts to favor defense spending, or if there's a broader capital rotation into microcap tech.
And just for fun, what's the speculative asymmetric upside here? Any unconfirmed rumors or potential blue sky scenarios?
Nothing confirmed, of course, but the logical speculation is based on a platform approach. If they successfully integrate Invocon, the next step would be more acquisitions, follow-on deals and other aerospace engineering niches.
Building on that new core.
Exactly. Or you could see new high-profile program awards from major government agencies. Those are obviously high-risk scenarios, but they represent huge optionality that could just dramatically change the company overnight.
So at the end of the day, Cemtrex is really a classic high beta story. It's focused on one strategic inflection point.
It is. It's the shift to higher margin aerospace engineering, and that has to coincide with that projected move to profitability. For a risk-tolerant investor, the setup is, well, it's asymmetric. You've got a deeply discounted valuation and clear near-term catalysts.
But the whole thing hangs on one simple question.
Can they successfully integrate Invocon and actually hit those positive margins?
That execution risk is the only thing that matters. Because if they succeed, they could go from being a discounted microcap to a specialized defense player. But if they fail, it's just another volatile trading vehicle. Thanks for tuning in.
And the question you should really be mulling over is this. Does the proven IP of Invocon outweigh the historical execution risk of Cemtrex's management? That's what determines the outcome.
It's a great way to put it. Don't forget to subscribe to Investing Talk podcast for more analysis like this.